So thank you for support, and we are going to start our webinar now. So hello, welcome everyone. So for tonight's topic, right, we are going to discuss about risk management and trading strategy with technical analysis. For today's topic, we will mostly focus on indicator. So we will cover things like MACD. How can we use the MACD? And then how can we use the Bollinger Bands? I will teach you how can you set up on the MT4, and then how can you look at it, identify it, or use the indicator to do some trading. And then we'll talk about the RSI also, which is one of quite famous indicator also. And then we do have the MACD. We also talk about MACD. Regarding how can we set it, how can we use it, we will talk in the webinar tonight. But before we start, there is a few of risk disclaimer as usual. As you know, I just want to make it clear that the information provided in this webinar is only for educational purpose and should not be considered as investment advice. So trading carries a significant risk of loss, and it's important to conduct your due diligence and seek professional advice before making any investment decisions. So same thing, past performance is not indicative of future result, and there's no guarantee of profit of success in trading. So this is a risk disclaimer. So we are going to start now. So the first thing is technical analysis. I think some of you might have, we do have some of the new trader around here. So some of them are confused about what is the technical analysis, what is the fundamental analysis. Actually, for trading strategy, right, it's very important for you to combine both technical analysis as well as the fundamental analysis. So for fundamental side, you need to fully understand what's going on in the market now. What is the storyline in the market? How can we use those market news in order to determine to buy or sell order? So we need the market news to identify the long-term trend for certain products. After you know the long-term trend for certain products, it's very important for you to know how what is the good entry price for you and what is the good stop loss price for you. So by using the technical analysis, right, you're able to set up the TP price, your stop loss price. It might also enhance like your entry level. So after you can use those support and resistance level to trying to identify what is your entry level, which is the best entry level. And after you enter the trade, you can also need to identify how can you take profit or set your stop loss at where. So this is a thing, a small talk regarding what is the technical analysis. And then most important, we are going to cover the moving average. So what is moving average? So moving average is a stock indicator commonly used in technical analysis. So it helps to level the price data over a specific period by creating a constantly updated average price. So it's quite complicated around here, but it's very simple actually for you to set and how can you to identify it. I will explain it later, but of course, we need to understand what is the usage for the moving average first. So for moving average, right, it's very important for trader to determine trend and signal from crossover. So if overall trend is like upward trend, then you need to forecast when there will be a trend reversal. So you can use the moving average and combine with certain candlestick pattern to identify a good trend reversal trend. So maybe you can profit from those trend reversal by using the moving average. And of course, the moving average, you can use it as a support and resistance also. So we look at the resistance product. And then, so I'm going to teach you now, how can we set the moving average? So we look at some clean product like USD now. Okay, so for USD, how can we set it? It's like you can click the insert over here, and then there is an indicator, and then you can see there is a trend over here. You go to the insert. I think this indicator is already in the MT4, so you can download from the MT4 and take from it. So click indicator, there's a trend over here, and then you click the moving average. Okay, so after you click it, then there will be a setting. So the first setting you should setting around here, you can look at here, and then the first setting you can put at 20 or the short-term line. 20 should be enough for short-term line, and then you can choose your favorite color. You can choose like black or red. You can choose any favorite color, but most important is you need to understand, if you set the red color and then you set the 20 period over here, means that this is a short-term MA line. The period 20, what does this mean? It's like this is like after you set out the line, right, you can see there is a line over here. So how can we know how to identify the moving average? When we set the periods like around 20, right, it means that it will calculate as 20 previous candlestick then they will like take the closing price of the previous 20 candlestick and then it divide it. So to simplify it, right, I zoom in. And if you look at the candlestick, you can look at here, you can move to the candlestick and then you will show you close price. You can see the euro close price yesterday is like 1.09995. And then the new candlestick is around, the new closing candlestick is around 1.10382. So according to the closing price, then they will calculate all those like 1, 2, 3, 4, 5, 6 until the 20 candlestick closing price. They will calculate all and then they will divide by 20. Then after they divide, right, the line will straight away come out. So to simplify it, right, actually for the MA line, especially for short term, when you set the 20 period, the short term, it means like it can enhance your short-term trading also. So you can combine. So after you set the 20 line, then you will come out the 20 period, it will come out, then another candle, the period, you might set around 60. You remember, you need to set one short-term and another long-term. 60 period around here means that they use 60 candlestick, the 60 previous candlestick closing price, and then they divide by 60, become the average price for them. So after you set the 60, and then you can choose any favorite color. You cannot like confused about your color. After you say, you need to know, oh, since I set 60 periods for the blue line, means that the blue line is the long-term line. So after you set up everything, you can see now we do have the red line, or the other time is short-term line. If you're confused already, you can just move towards the line, and then it will show you. You can see moving average bracket 20. Okay, so after this one show out, right, you can able to identify the trend already. So now is the setting. I hope you guys understand how to set already. If you have any if you like confused to the setting, you can let me know also later. Okay, so now you know the setting already. How can we use this setting to identify a good trade opportunity? As we mentioned just now, right, moving average is very good for you to determine any trend reversal and from crossover. So one example is this. So when the short-term line is above and then the long-term line is below, is what we call the bullish crossover. So this is an example. You can see that I set the 20 as a short-term line and then 60 as a long-term line. Maybe I change the color into blue. You can see maybe I set the color to blue, to green, will avoid confusion from you guys. One moment, yeah. So I change to green color. So it will align with the slide over here. So you can see that when the short-term line over here, the red color line, start to cross over the long-term line, you can see the green color line overall is downward one. But once there is an X cross around here, overall trend start to rebound significantly. If we are going to calculate as how much you can profit, right, you can draw up. It's around 1,000 US dollar if you are going to do 0.1 lot. Okay, so this is the things over here, 0.1 lot. So you can have a very good trend reversal, like overall trend is downward, and then you are confused when the euro will start to rebound. Then the first thing is you can set the MA line and then you try to search for there is a cross. So remember, if the short-term line, the red color is the short-term line, remember, and then the green color is the long-term line, is what you set one. So when the short-term line below previously and then it start to cross over to above, it means that there will be a trend reversal over here. So the overall trend will start to go up a lot. So this is how can we use the moving average, like the bullish divergence. So remember, short-term line is above, long-term line is below, then it's what we call the bullish crossover. And then we do have the long-term line is above, short-term line is below. It's like bearish crossover. Okay, so we try to identify a few examples about the bearish crossover. So this is an example. You can see that overall trend is upward, and after there is a crossover around here, the short-term line cross below the long-term line, overall trend start to drop a lot. So we look whether we can find from USD or not, like previous chart. So this is a good example. You can see that you can identify this. This is a good example. Previously, all the green color or the long line is above one, and then the short-term line is below. If there is a good crossover around here, overall trend go up already. But of course, it's not 100%. We do can see some of the bad example over here. You can see even though it crossed below, but it do not move a lot below, but it still rebound back. So we need to combine a lot of indicators together. Better you combine the indicator along with the candlestick pattern. This is one of the good example, but we sometimes do have the bad example, so you cannot like all in to do just a moving average indicator. So you need to try to combine a lot of few things. But how can we use moving average? Is like determine the trend reversal. So once the short-term line cross above the long-term line, overall trend increase a lot. Okay, so this is the usage of the moving average. And then this is what we call bullish down when it go up. And then when the here is the bullish example. So short-term line cross above, it's go up. Okay, and then I think you guys have a brief understanding about how can we use the moving average already. But of course, it's not only crossover is good to use. Sometimes some of the trader might also use the moving average as a support or resistance level. So I show you some of the example. Hope you guys enjoy the webinar. I show you some of the example. Okay, so you can look at here. You can see a lot of candle keep touching the moving average line one. So if I zoom in one moment. You can see here every time this candlestick touch the moving line, the red line or the short-term line, it will start to rebound back and then touch again, rebound back, touch again, start to rebound back. But once it's break below the line, the red line or the short-term line around here, it will drop. It will drop until where? The first support level, we should focus on the green line around here. So you can see that a few candlesticks will continue testing a few around here. And once the green line successfully break below, once the candlestick successfully break below the green line, you can see that overall trend, it will drop. And drop until where? The previous support level. So this is how we identify. But if you want to do like short-term trade, right? You want to use like moving average as a resistance and support, the recommendation should be short-term trade because all those resistance and support is quite near. So, but for long-term trend, maybe you can focus on the crossover, the trend reversal. So this is another example. After it touching, it rebound, and then it touch again, it rebound again, it touch again, it rebound again. So this is an example. So, but before it touching, before it increase a lot, right, you can notice that it's actually successfully break out above two resistance line. First resistance is the red line. You can see after it touching here, it rebound, and then it break out above the red line, and then it touching again the long-term line or the green line over here. Then after once it successfully break above this green line and red line all together, it increase a lot. So this is also another example you can use as a resistance and support level. And then after I hope you guys understand about the ML line. And then we are going to move towards others indicator now. So others indicator, maybe we can focus on a few things like Bollinger Bands, which is also one of the another famous indicator also. And then we look at the how can we will determine how to set it. So same thing, same charts. We are going to use the USD daily chart. And then how to set the Bollinger Band. You click insert over here. Okay, then you can look at the indicator. You can look at the indicator over here and you scroll down. Just now moving average is trend, but for Bollinger Band is from oscillator. So one moment. Yeah. Okay, sorry, it's from trend also for the Bollinger Band. The same error with trend. You click trend and then you can see the moving average and you can look at the Bollinger Band. So you can click it. Then you set the period as 20, and then the Bollinger Band will start to form already. For Bollinger Band, right, you can see that they do have 3 lines over here. So for Bollinger Band, how can we use as a trade strategy? It's like very simple, but for this Bollinger Band, it's more suitable for something like short-term trading because same thing, all the resistance and support level is quite near also. So how can we use it? Okay, so to give you an example, after you form it, right, you can show there is a 3 line over here. And then when the candlestick pattern start to touch the upper band or the area over here, you can consider a sell, because normally, or not consider a sell, this should be a oversold region. So you can see after you set up, there are 3 lines over here. So once candlestick touch the upper part, the maximum upper part, then you can consider sell, because maybe it might retrace back until the midline. And then if you're testing a midline again, if successfully break out below the midline or the orange line around here, then will drop again. So where will it drop until? So maybe your TP area should put on lower band here. So the lower band here. So you can see that all those candlesticks, right, it will trade within the Bollinger Band one. So a good thing should be you might consider to sell when it reach the oversold territory. Oversold territory means upper band, and then you can consider a buy when it reach oversold territory, like trade in this area. But it will be better if the trend can consider as consolidate in one range, because this is a bad example. Sometimes you consider like, overall trend should it's in normal scenario, right? You should be sell over here already if you are going to according to Bollinger Band. Okay, but you can see this is a bad example. You try to sell it, but because of the trend is too strong already, combined with certain strong fundamental news, it ignores the technical analysis, and this is why it keeps going up. So when the trend is upward, right, it's better for you to focus on buy order. Buy order, how can we buy order? It's like we focus on lower band. Once it touch the lower band around here, we consider buy, and then we TP around here. Then if it touch the overbought territory or it touch the upper band, you should ignore it, better for you to avoid this kind of risk. So you can, I give you an example. So you can see overall trend is upward trend, right? So you can consider buy here, and then it up until the upper band, you TP, and then you wait again until here, then you buy again, and you TP around here. So better for you to wait like this. If not, you might have a risk like if you buy here, you sell here, you buy here, and then you sell here. And imagine if you are in this area, so you buy here, and it keep going up, then we will have a lot of loss. So better, how can we use the Bollinger Band? It's like we try to identify the long-term trend first. Overall trend is upward, then we consider a buy entry order. Once every time it reach the lower band around here. So once it reach again, you buy, TP, wait again, drop again until here, you buy again. So it will be good, because imagine you buy around here and then you TP around here. This is a very good profit also. Okay, later we'll go through some real life scenario. Okay, so this is the real life scenario. So you can see that overall trend, you need to remember overall trend is downward trend, right? Imagine we ignore here first, we focus on here first, okay? So overall trend is downward trend. And then remember what I said, when downward trend, maybe you can consider sell instead of keep buying when it reach the lower band. So you can consider sell when it reach the upper band. You can see there is 3 lines over here. Maybe I will remove the moving average first. So I hope clearer for you guys. Okay, so remove already. So there's a 3 line over here. Remember I said when you reach the upper band, you can consider a sell, and then sell until the lower band. Then you TP around here. So better if you identify the trend first. If not, if you are just selling when it reach upper, buying when it reach lower, then this is a very, very bad trade for you already. So imagine once it reach lower, you buy around here, then it keep going down. So you lost a lot. So better you identify a long-term trend first, and then trying to sell when every time it reach the upper band. So you can sell here. Maybe you can TP over here, because you are very difficult to focus until here. If you are real life trading, so you sell here, then you focus until the lower band. Once it reach, you TP, and then you need to patiently wait until it touch the upper band again, and then you sell again until here. Okay, so overall, even though it's keep going down, but better you don't buy when it reach lower band, because if you buy, you will encounter a lot of loss actually. So this is a thing that you need to be careful. So sell here, TP here, and overall go down, right? You need to patiently wait until it reach the upper band again, and then you sell again. And you reach the upper band again, then you sell again. Better for you to identify trend like this instead of just buying on lower and upper band. I know I keep mentioning this, but this is quite important for you also, because normally a lot of people thought that you just buy on the lower band, sell on the upper band, but when there is a strong trend, we will lose a lot of money. So for safe trading, you can consider like this. Like this is another scenario. You can see that. Now we focus on here. Okay, so overall trend already have a strong trend reversal. If there is an MA line and then you look at the MA line and see, oh, there's an M crossover, then there will be a very strong trend reversal. And then now you know the trend should be upward trend already. So you focus buy on or lower band, and then you sell on the upper band, and then you sell again on the buy again on the lower band, sell again on the upper band. Then you patiently wait until you reach again the lower band. Then you sell, you close your order, like you buy around here, then you close your order when you reach the upper band. Okay, so this is an example for you. So I repeat, identify long-term trend first. Long-term trend for Bollinger Band is upward trend. Then you focus on the lower band. Lower band means the lowest line to better clarification in case you guys confused. So you buy here, sell when you reach, close your order, not sell, close your order when it reached the upper band. So you wait again, okay? And then buy again around here when you reach lower band, then you close your order when you reach upper band. And then you need to patiently wait until it drop again and reach the lower band. This is how we trade by Bollinger Band. It's better for you if you can combine with strong support level. So one of the examples, this is Euro chart. And then you can see here is a very, very, very strong support level. It tests a lot of time already, actually previously. Like previously I test around 4 times before it hit the Bollinger Band lower band. Bollinger Band lower band. So we combine the technical, okay? We combine the support level, and then you can identify this is a very, very strong support level. And then it combined with the Bollinger Band indicator, you can see that it reached the lower band. And then if we are going to focus nearly on the candlestick pattern also, we can see that candlestick pattern. If you are going to focus on the candlestick pattern here, you can notice these 2 candlesticks, right? It's actually bullish engulfing candlestick. Bullish engulfing means the sell candlestick is smaller and then the buy candlestick is larger. So this is what we call the bullish engulfing candlestick. So after you combine all these things, so I repeat, Bollinger Band is just one of the indicator, but of course you can combine with a lot of different indicator better for you to trade. So you can see that after it touched the lower band, then it touched the strong support level also, and the candlestick is already successfully formed a bullish engulfing candlestick. So overall trend start to become positive. So how can we set our TD? Maybe you can focus back on the previous support level. So I hope I clarify it, like how can we use the Bollinger Band. If I'm too fast, you can also let me know on the chat box also. Thank you for all your support. And then we are going to move to the next, which is the RSI. I think RSI is very, very simple for all of you to understand also. So of course, how can we use the RSI? Same thing, I try to remove all the indicator first to prevent confusion. So in case you guys are new to the MT4, right? Like if you accidentally set too much of indicator on the chart already, on your trade already, right? So I am going to teach you how to remove some of the unnecessary indicator. So you can click the indicator list right here. After you click it, and then you can see there's a table here. So you can actually remove one. So you can see the main chart, Bollinger Band, then you delete. And it will automatically remove already. So now we are going to focus on the RSI. So same thing, how can we set the RSI? Okay, so insert here, same thing, indicator, but the difference is it's no longer in trend. The RSI is at oscillator. So you can move towards below. The RSI, the full name is Relative Strength Index. You need to know it. If not, you are very difficult to search. Like you can't find the RSI. So remember, Relative Strength Index is what we call the RSI. So after you click it, and then you just put the period at 14, and then you can choose your favorite color, any color, your favorite color in the MT4. And then you can even make the line thicker. So it's your own preference actually. So after you make it, then it will come out ready. So everything is very clear. And then this is what we call the RSI. Okay, so you guys know already how to set the RSI. Then we are going to focus on how can we use it. So look at the PowerPoint, and then you can notice that this is a chart over here. So how can we identify RSI? You can notice RSI, there are 3 lines over here, like the 70 line, and then the mid line, and then the oversold line. So after you notice this, right? So how can you use it? So you can see that every time this blue line, every time this line touch the 30 around here, every time the line touch the lowest line around here, and even break below the lowest line around here, break below already, it can consider is what we call, this is a oversold territory. So when this thing happen, you can see the candlesticks go up one. You can notice this. So this is another example, touch the lowest point already and even break below the lowest point already. To clarify, maybe this like touching the 20, RSI 20 is what we call. For some analysts will write the RSI is reached 20, is already in the oversold territory. So this might be a very good buy signal, because oversold means a lot of people sell it, too much people sell it already. So might be a good buy signal, and then this is a good trend reversal. So once it reach oversold territory, it might be a very good trend reversal happen, and then it might be a good buy signal also. So after that, we can look at this another RSI, an example for bearish terms. Like you can see, once the RSI reach the above, remember, you cannot confuse to it, because once it reach above, it doesn't mean you need to buy. No, it go up doesn't mean you need to buy now. You need to know that when RSI go up means too much people buying this already. The thing is already overbought. So it might, any trend reversal might be happen when this thing happen. Okay, when the RSI reach the overbought territory. So when it reach the overbought territory, it over the line already, then it might be a good sell signal. You can look at the candlestick, it's go down. Okay, but of course, same thing. Technical analysis is technical analysis. If all those fundamentals are too strong for the currency or the commodities to keep going out already, then even the RSI is in overbought territory, the chart is not going to in sync with our expectations. So as I mentioned, it's very important for you to combine a lot of things. Later we'll show some of the examples. So this is the example. Maybe any products that you guys are interested for me to look at. I saw somebody ask me about gold. So maybe I can talk about the gold. Maybe I talk about the gold. How can we identify the RSI for gold? So after you set out everything, you can look at the gold, and then you can see that. So this is a very, very good example for gold. As you can see, the RSI, this line, cross below the 30, and then cross below the lowest line here. Then this is what we call, just now is what we call oversold territory. Maybe this is a very good order for you to buy. So you can notice this. So when this thing happen in the oversold territory, the gold price rebounds significantly. So this is the main thing. This is an example. So previously like this, and then it go up. Okay. Another example should be around here. The latest one example, but of course you shouldn't be sell now. Maybe. So maybe you can look at the RSI. You can see this is the overbought territory. After it reached the overbought territory, and then if you already sell it, it's congrats, it's very, very good. And then you can notice that the gold price actually dropped a lot. This candlestick is dropped a lot. So let's look at your profit. Maybe it dropped around 100 pip. It's quite a lot. Around 100 pip. So this is another example. So once RSI reached the overbought territory around here, it keep going down. So I saw a lot of different currency, but I will try my best to answer. But I will choose, I think some of the famous one. Maybe you can talk about the USD JPY. We'll talk about it later. Maybe you can talk about the UCAD first. Then same thing, we set a RSI. We will try to explain it with RSI. Yeah. So hope you guys have a better understanding. Okay. So the RSI is already come up. So this is a bad example. Once I open, you can notice that this is a very bad example. Even though the RSI in the overbought territory, but it do not drop a lot, but it dropped lah, but do not drop a lot lah. So this is another example. So one is reached over support territory, it dropped back, but it dropped until the upward trend line around here. So you need to combine like your support resistance along with the upward trend line. So this is one of the example, and this is also another example. One, it reached overbought territory around here, it dropped a lot. Okay, it dropped until where maybe you can consider, you can combine the RSI with your stop loss level, because if you sell around here, you don't know you can sell until where, right? So it doesn't mean like RSI show you overbought territory, then you sell like no tomorrow, cannot. So you need to find maybe it will drop until another support level. So here should be a very, very strong support level. So you can sell until the support level. One is reached like overbought territory, maybe a good sell signal, but even a good sell signal needs some TP point. So you need to set it off. So you can set around the support level around here. So this is a good example here. Once it reached the overbought territory, you can see overall trend is going up. This is one of the good examples, but of course, sometimes you might experience some bad examples also. So better don't just like because one of the RSI indicators says so, then you all in your money. I don't recommend you to take this kind of risk. But remember, our webinar is about the what we call trading strategy with good risk management. So cannot just use one indicator and then you are going to all in your money. Better not. So you can try to combine a lot of things. I hope you guys have a brief understanding about what is the RSI already. And then, okay, so we're going to move on. And then we are going to move on to the moving average, MACD, which is also a good thing for everyone. MACD, how can we set it? It's also very simple. So now I already set it here, so I try to remove. So I teach you guys again how to remove. You click indicator list, and then you click here, and then you delete. The MACD is gone. Everything becomes clear. So how can we set the MACD? Then you move here, you click the indicator. It's actually at custom. This will be different a bit. This will be at custom. And then you click the MACD. Once you click the MACD, it will actually come out. Okay. And then, yeah, after the MACD come out, right, and how can we identify it? Like you can notice a lot of guys, a lot of people teach, those who teach MACD one, they are trying to use a lot of quite complicated things for everyone to understand. But MACD for me, right, I normally just focus on the histogram. Even there are a lot of different kind of line. Like here, you can see there's a blue line, red dot line, histogram. Normally, I might just focus on the histogram. So for example, if the histogram is at below the 0, 1, you can see there's a 0 here. Because this is from the MP4. I hope it can be simplified for everyone to understand. Some of you you can also search for the trading view also. But I will use the trading, the MP4 as an example, so easier. So you can see there's a 0 over here, which is what we call zero magnitude. And then when the histogram, you can see there's a different histogram, okay, like this. When the histogram is keep moving up from the 0 magnitude, it's keep moving up non-stop. They do not turn below. Like it keep moving up around here. You can see that it will same with the trend one. So once you notice that the histogram is slowly moving up, then it might consider a good buying trend already. So this is an example. So once move up, it's what we call bullish momentum increasing. So the candlestick also keep moving up also. So this is a good buying trend. And then once the histogram around here start to moving down to the 0 magnitude, is what we call bearish. A bullish divergence is already diminishing, means that the bullish divergence, the power of the bullish momentum has started to slow down already. This is why it starts to retrace back. So this is how we understand as the MACD. So we just use the MACD, the histogram around here. You can see that overall in the upper magnitude of 0, the MACD keep going up and going up. The histogram keep going up. They will be aligned with the candlestick one. So once it reached the peak and then going down, it means that bullish momentum is already start to slow down, and then the trend might be slow down. But for you can notice that there is a bullish and there is a bearish. The below one, the below 0 magnitude is what we call bearish. The idea is mostly similar. You can see that once the histogram is below the 0 magnitude, it's keep moving down means that the bearish momentum is keep increasing. So the candlestick will keep dropping. Drop until where? Until you can notice the histogram become flat and then turn up. So once it becomes flat and turn up, it will slowly go up. Okay, so this is how we use the MACD histogram. You might just focus on the histogram, but I know a lot of people, a lot of traders will trying to use a lot of different things, but I'm trying to simplify for everyone, since some of you guys might be new. Okay, so you might just focus on the MACD. The histogram thing should be good enough for you to focus on the chart already. And then, so this is an example. You can see the line keep going up, the momentum keep going up, means that it's a very strong uptrend, then you go up. And this is an example. When you notice that the histogram around here keep moving down and moving down, is what we call the bearish momentum. It starts to increase already. So overall trend starts to go down. Trend reversal should be around here. From the bullish momentum, it dropped below the magnitude 0 and then it starts to drop. So this is what we call bearish momentum is increasing. The overall trend should be go down. One of the crucial indicator, but the better indicator if we are going to use the MACD, right, is by understanding the divergence. We'll talk about the divergence. It's also a quite useful indicator for me also. So the divergence is actually combine the MACD along with the candlestick pattern one. So how can we use the divergence? Okay, so at first we try to understand what is divergence first. Divergence is something like able to help you guys to understand about the trend reversal. Once you see the divergence, okay, so you might consider the trend will be different. So the trend will be changing already. Okay, so and then we do have the positive divergence and then the negative divergence. How can we use the divergence? Is by we focus on the candlestick pattern and then we focus on the MACD. Then I will give you a very good example. Divergence is very difficult to find, but once you find it, the probability for you to win the trade should be higher compared to others. So this you need to listen carefully because this should be the hardest indicator that we are going to teach today. Okay, so let's talk about the positive divergence. So positive divergence will be happens when the candlestick, this is the candlestick pattern. The overall candlestick pattern is going down, but if we are going to focus on MACD, the MACD is going up one. It seems quite complicated around here, but once I open the chart, you will have a clear understanding. So you can see that overall candlesticks keep dropping, especially here keep dropping. But you can notice the MACD line around here, especially the blue line. The previous low is much lower than the current low around here. So once the MACD become upward trend, and then once the blue line turn curve, it should be a very good trend reversal. It's going up. Okay, so you need to understand, you need to follow the MACD instead of the candlestick. Some of you might confuse like, oh, candlestick go down, MACD go up, then I sell. No, then you might encounter losses. So better for you to focus on MACD. Don't confuse to it. So once the MACD line is the upward trend and the candlestick is downward trend, you follow the MACD. Once the MACD turn curve, then it should be going up already. Later, I will find some real life example for you guys. And then this is the negative divergence. It's different. Negative divergence is something like the price going up, but MACD go down, so it will be sell. It just a bit different from the positive divergence. Positive divergence is something it's a very good bullish trend reversal. Negative divergence is something like bearish trend reversal. So this is the example. Candlestick pattern keep going up, but MACD trend go down. The previous high is much higher than the current high. So it's what we call, you can draw a downward trend line around here. So once you draw it, you can see that once you notice it dropped a lot. So this is a trend that are very difficult to find. It's not all trend you can trade like this. And then, okay, so we find some real life example. Just now, I actually noticed a very good example, which is the USD JPY. Some of you are very interested for USD JPY, but its previous trend is not now. USD JPY is one of the a good example for negative divergence or the bearish divergence. You can notice that it's quite nice. I already draw out here. So the candlestick is keep going up, and then you can notice this MACD or the red color line going down one. So once this thing happen, right, and then you combine, same thing, you need to combine with certain candlestick pattern, no? And then you can notice the candlestick pattern here. The sell candlestick is actually much larger than the buy candlestick. So it's what we call bearish engulfing candlestick. So bearish engulfing candlestick happen around here. So when this thing happen and you combine with this MACD, negative divergence, then overall trend should drop a lot. And you combine with the MA we discussed just now, right? MA line, it takes quite long time for you to notice there is a trend reversal, because you can see that if you only follow the MA line, right, you need to wait until it cross, then you can only sell, right? So still remember, right, when the short-term line drop below the long-term line, it should be a very, very good bearish signal. If you wait until here, then you will like wasted few profit previously already. Like if you trade here, the profit should be higher. Okay, so maybe if you notice the bearish divergence earlier, and then you sell earlier and combine with the bearish engulfing candlestick. Same thing for clarification. Bearish engulfing means that the sell candlestick is larger than the buy candlestick. This is a sell candlestick, so you can notice here. Try to zoom in and zoom in again. I hope it's clearer. And it's quite obvious lah. This is the buy candlestick. This is the sell candlestick. Once you combine all those signals, you can notice the trend is quite nice. And then if you notice again, there is a bearish divergence, then it's a very good point for you to do your trade. So this is one of the examples. So you need to find yourself, as I mentioned, the bearish divergence and the bullish divergence are very, very difficult for everyone to find. So let's look at another example. Yeah, it's very difficult for you to find. Even this, I don't think there is a bearish divergence. But once it forms, you can try to combine on a few things. I think this is a good bearish. Okay, I found oil already previously. For now, don't have already. So, okay, for now, you can notice that candlestick here is our trend. And then you can notice the MACD is our trend. You can notice that the previous high for the red color line is higher than the latest line for the red color line. So here is higher than here. And once you wait until the red line turn curve, you can consider a sell signal. So once you sell, you can notice that this is another good trend reversal. But here do not have those bearish engulfing candlestick, bullish engulfing candlestick up. So difficult. But once you notice this trend, you might consider a good sell signal. But of course, you need to put your stop loss. So when you notice there's a trend reversal, maybe your stop loss can put a little bit higher, and then your TP can put more higher, a lot higher. So this is one of the example. Bearish divergence. This is what I call bearish divergence. So I repeat again, you do not focus on the candlestick. Just please focus on the MACD. So if you look at the candlestick downward trend, it's upward trend, and then you look at the MACD, it's downward trend, and then you confused. You thought, oh, maybe I should focus on the candlestick. Then it will be wasted for you. So remember, bullish and bearish divergence, it will be better for you to focus on the MACD thing. Okay, grow to line, candlestick pattern go up, MACD go down, it should be a good trend reversal to drop back. So this should be our last session.